Good morning. It's Tuesday, September 3rd, about 6 a.m. Central Time. All right, the precious metals are mixed with copper and silver under significant pressure. I'll tell you why in a minute. So let's give a quick recap on Friday because it's been about 3 days. We saw some month-end profit taking. We also saw liquidation. Gold futures corrected about 1%. Platinum was down 1.5%. Silver was down 2.5%. And copper ended the session unchanged on the potential for Chinese stimulus. Friday's PCE data showed that inflation is still contained and slowly approaching the Fed's 2% target. The focus is now shifting to the labor market, where Jerome Powell stated at the Jackson Hole that the risks have tilted to a weakening labor market. So the economic focus this week, the Fed is going to get the necessary data to make its policy decision and determine whether the economy needs 25 basis points or 50 basis points of interest rate cuts at the September 18th meeting. So grab your calendar, circle September 18th. That's the Fed meeting. You got to watch what happens there. Now, we will have ADP, ISM, manufacturing and services hiring numbers. We'll also have jobless claims, JOLTS, and Friday's payroll data in focus. On Friday, we expect between 150,000 and 200,000 jobs created. The consensus is for 164,000 jobs after last month's disappointing 114,000 jobs. We would not view any kind of significantly higher number as a blowout this Friday, but rather just merely a snapback or in the lines of a recovery. So the unemployment rate, which rose to 4.3% on August 2nd, is expected to tick lower to 4.2%. So here's my take on the Fed. I believe that the Fed prefers to cut 25 basis points, where 50 basis points may be perceived as a panic or a rescue. They don't want to put that kind of perception in people's minds. The Fed only really needs one bullet right now. They do not need a bazooka. Now, there are two more meetings after September. The market was pricing in 100 basis points of cuts, but probably it should be cutting in about 75 basis points after this week. Where is the Fed's neutral rate? That's what everybody wants to know, and that will be determined in the future. Now, overnight, couple things here with the metals. I did put out a video yesterday, and I did do an email with a comprehensive breakdown of the seasonality of precious metals during the month of September. Historically, it's a very weak performance. Don't think I'm just picking on the precious metals. That seasonal weakness also ties into the U.S. equity markets. If you got the email over the weekend, I suggest that you at least glance at it and look at the data because it is a bit staggering. Now looking at the overnight action, because copper futures down about 3.15%, silver down 1.61%. Remember, they've been very correlated recently. Really, since the May rally, have those two been hinged, and they've been very reliant on China. Over the past several weeks, I've told you that China is the 1-2 punch that silver needs in order to hit significantly higher prices. You have to see gold futures linger around new all-time highs, continue to show a series of lower highs and higher highs on the charts, and then also you need that recovery in China in order to get that boost on the manufacturing demand. Silver makes up between about 55 and 65% manufacturing demand. So the analyst downgrade was Goldman Sachs. They released a new commodity views report called Go for Gold. It's right here. And in the report, they forecast a cut on copper, at least the prices. They cited that softer than expected Chinese demand, as well as downside risks in Chinese forward economic outlook. They're also closing out their previous long bullish stance on the copper market for clients. So probably many of those clients also had silver positions on as well. They probably closed those out in conjunction. Goldman cited that China's consistent property downturn and growing headwinds in the manufacturing and export sectors are reasons to question whether or not the country can achieve its 5% economic growth target. That's one thing that about a week or two ago, we saw several different banks come out and they cut their expectations on GDP out of China. That's kind of when the copper market had peaked around that 425, 430 level. That's when silver was just over 30, bumping around $30.50, looking like it was going to break out. So getting to the charts here in the chart pattern, if you look at the gold futures, still just kind of in this larger kind of dome of an upward kind of strange consolidation pattern here. So the dips have been bought. I suggest using some fractal geometry and then also looking at the probable ranges here in order to continue to accumulate gold futures, as even in this report, Goldman Sachs analysts expect $2,700, but that goes all the way out to 2025. I think oftentimes they achieve those price targets much earlier than expected. I think your critical level of support on the gold market, about 2,500 will be psychological, 2,482, that will be where the market goes back into this consolidating neutral trend, and then you don't want to see a close below the 50-day moving average, as I think a lot of the, I don't want to say unsophisticated traders that don't use some kind of other algorithmic tool to help them, but more of the archaic traders that use things like 50 and 200-day moving averages, they will start to liquidate some of those positions. Now, getting into the silver market, silver did break down, did break into, if it closes at this lower level below 2866 and a half, currently right now 2868, so just back above it, that's kind of where the market does go into a bearish trend again. I know you don't want to hear that. I just be like Bruce Lee, go like water. Wherever the market goes, that's the way that I position, and that's the way things go. I don't take my long-term perspective, which I believe I have to check that at the door, that says silver's going to go to break out over 32.50, 35, 40, 45, $50, and then the world is a glorious place again. So I got to keep that emotional part aside from the technical analysis, and then the economic focus, and then kind of the global sentiment on how things are going. And that's where you can really differentiate yourself and position and properly prepare for these types of downturns. So looking at the copper market, that's another one that had broken significantly, never was able to close above the 50-day moving average, broke below the 200-day moving average, which it's been bumping along for several trading sessions. And then if the trend reversal point is about 412 and a half, we have stochastics declining from that overbought territory, reflecting on the silver market also declining from the overbought territory on stochastics. So those are some things we're going to watch. We did have an explosion in volatility in the silver market on Friday with a much larger move than the average true range, and those are oftentimes the warning shots for something bigger to come. So if you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, go get them.